with other crises. This shows you, this line chart just shows you
originators of it. There really aren't any originators. Everybody got caught in. Some were foolish, some were crooked.
Place Ruth Bader Ginsburg.
Now, Barrett was born in 1972, less than a year before the Supreme.
Over the course of history, the stock market has crashed multiple times, and each time wasn't pretty. Investors lose a whole lot of money, and big companies aren't immune from this either. Recently, there have been talks of yet another market crash in the near future, and investors need to brace for its impact. What are the factors that lead to the stock market crashing? When is the next big crash predicted to happen? Well, that's exactly what we're going to be talking about today, so sit back and relax as we go into the finer points of the upcoming global stock market crash. This is Business Explained. To learn more about all things money, get educated about how to do business, become business savvy, and enjoy more videos like these, subscribe to my channel and click on the notification bell, and may you be granted with many, many sweet returns. Before we go any further, let's take a look at a brief history of market crashes of markets around the globe. The first recorded market crash began in 1634. Care to guess what the cause was? Well, it was a speculative bubble on the unluckiest of things, tulips. Back then, the Dutch elite were smitten with the beauty of the flower that was imported from the Ottoman Empire that it created high demand. The tulip was seen as a status symbol, and pretty soon, everyone was buying tulips. The prices of tulips went up for years as people from all economic classes began buying the flowers to sell. However, they did not count on the tulip craze dying down, which it did in 1637. This bankrupted a lot of speculators who were counting on interest in the tulips lasting forever. The crash from this had many implications, and it had a big impact on the Dutch economy. It took them years to recover from it. Now, as I've said, there have already been quite a few market crashes in the world. However, there are a few that have earned the reputation of being the worst ones to hit the market. Let's dive into some of the worst market crashes that have happened and see the repercussions these had for both society and the economy. The first one on our list is probably the most well-known of the bunch. October 29th, 1929. This happened in the late 20s and put an end to what was called the Roaring Twenties, known for being an era of growth and prosperity for many Americans. This infamous event is known as Black Tuesday, and it signaled the beginning of the Great Depression. During the earlier years of the 1920s, the US stock market expanded rather quickly. However, it began to slow down in 1929. Prices began to fall come September, and the Dow Jones Industrial Average crashed by 12%. The markets hit rock bottom by 1932, and it had terrible repercussions across the globe. Those who were fortunate enough to have been employed saw drastic pay cuts. It was extremely difficult to find a job, and unemployment in the United States alone rose to 25%. It was only 25 years later, through numerous measures to stimulate the economy, did the Dow Jones Industrial Average manage to recover. The second market crash we're going to be talking about is the global financial crisis of 2008. Back in 2006, housing began to get more affordable. It seemed like a pretty good thing at first, until people realized that a lot of the homeowners had questionable credit scores, and that the banks had approved people loans of 100% or even more what the home was worth. The cause of this financial crisis was deregulation of financial derivatives. The market became unstable, which ultimately led to the market's crash in 2008. The government had to bail out a lot of the companies who were affected by the crash. The crash of 2008 was the worst disaster to hit the global economy since the Great Depression of 1929, and it led to what was known as the Great Recession. It took roughly 18 months for the economy to bounce back. The third and most recent stock market crash we will be talking about is the 2020 stock market crash, which began on the 20th of February 2020. This stock market crash was yet another global stock market crash, with stock markets across the globe reporting their biggest one-week declines since the financial crisis of 2008. The markets became very volatile come March, and they suffered severe market constrictions on March 9th. The Dow Jones Industrial Average went down by 1,800 points, 500 points lower than what was predicted by analysts. It was the worst hit the stock market had faced since a Great Recession. The crash was a result of the COVID-19 pandemic, which crippled many businesses and institutions worldwide. The coronavirus pandemic is considered as a pandemic with the most impact since a flu pandemic back in 1918. Businesses are slowly trying to get back on their feet, and many individuals across the globe are still trying to cope with the effects of the pandemic. Now, why are there talks of yet another stock market crash on the horizon? Well, that's because historically, September has been known to be the month that the stock market often performs the poorest. Some analysts say that September is the worst month for investing, while others have dubbed this global phenomenon as a September effect. Since the 50s, September has, on average, seen a decline. The Dow Jones on average goes down by 0.8%, while the S&P 500 on average goes down by 0.5%. When the Nasdaq was established, it has seen an average drop of 0.5% in September. However, this is not the only reason why the stock market is expected to crash. As we have seen in the cases of our previous stock market crashes, crashes happen after the market has an exceptionally good run. Just think about the tulips, the roaring 20s, and the housing market. August was recognized as a bull market for a period of time in which prices are expected to rise. The S&P 500 confirmed that it was in a bull market on the 18th of August 2020, after closing just above its record high. Its longest bull market began March 2009 and ended in March 2020 because of the coronavirus pandemic. However, from its low in March to its all-time high on the 18th of August, the S&P 500 rose by a whopping 52%. The present condition of the market is eerily similar to how it was in the September months of 1986 and 2000, when the S&P 500 fell by 8.5% and 5.4% respectively. Analysts are claiming that we are due for a market crash soon due to compounding factors: the COVID-19 waves, the downturn from August's bull market, and the hubbub caused by the 2020 elections. Now, knowing that a crash may happen anytime soon, what should we do? What will be its repercussions on the global economy? And how long is it projected to last? Well, that's what we're going to be talking about in another video. What are your thoughts on the stock market crash that happened throughout history? Do you think that a September stock market crash is sure to happen? Let me know what you think in the comment section below. We're responding to all of you who comment within the first hour of my posting this video. Since you watched this video, you should definitely check out my other video called The Upcoming Global Stock Market Crash Part 2. Now that we've discussed the possibility of a global stock market crash happening sometime soon, what can we do about it? How can one cope with being in the midst of a global stock market crash? And how long do these crashes typically go for until the economy is able to recover? That's exactly what we're going to be talking about on the upcoming global stock market crash, Part 2. Stay tuned, stay educated.